Most people don't even realize in Canada there are two permanent life insurance policies that are used on a regular, consistent basis. Products, sorry, not policies. Those are whole life and universal life. If you have the wrong one, it can cost you thousands of dollars, missed opportunity in wealth, or even cause you to lose your life insurance policy before you even need it, and your family is all of a sudden stuck with bills that they had no idea they were expecting because they thought your policy was still valid. Stay tuned and I will explain to you exactly what the difference are, the best ways to use them, and the cool thing is you can have multiple policies. You don't just need one or the other. You just need to give them one job and let them do the work that they're supposed to do. Whole life. Think about it as that steady relationship, the one that you can rely on, the one who has your back no matter what, the one that you can cry to and they're not going to judge you or anything like that. They're there, they're set for life with you. You could probably call them to help you bury the bodies and give you an alibi. Oh, wait, no, burying bodies. That's probably more like your universal life. You know, you're an adventurous person, the one that's like, I've got your back. They're the life of the party. They're the ones that are all there for going hard. And, you know, they may not necessarily be the most predictable. They are more flexible. So they have two different purposes. The steady one, so depending on what you're interested, if you want just a regular life insurance policy, whole life is your better idea. It is going to be a bit more expensive, but it's guaranteed. And the cool thing is, if the company makes money, they often give it back as dividends, so it actually grows your cash value as well as your death benefit. The universal life has a bit more unpredictability because it is based on the market, but you can change how much you put in or not put in. You just want to make sure that you're putting in enough to cover your policy, that it doesn't lapse. Your financial service person should be doing that with you. If for any reason your life insurance agent is not contacting you on an annual basis, then make sure you reach out to them, or better yet, reach out to me, because there's a very good chance that you probably don't have what you need if they're not taking care of you, because this is part of our job, is to consistently support you, not just a one and done type of thing. So let us know. Now, strategies for how to use whole life. A lot of times they are used for estate planning to make sure that there's money set aside to cover for businesses, to be able to cover for house transfers, anything that you need to do in order to help your family, support your family. A lot of times people use it for charities to be able to set them up as beneficiaries, to make sure the charity and organization that they want to donate their money to actually has something that they can use. And they also use it for infinite banking, being your own bank. Because it's more guaranteed, there's more predictability about the money that's in it. You can get a loan from your life insurance company and then be able to use that to pay for stuff. So you don't need to go get a mortgage. You don't need to go get something from the bank and have to pay it back, because you can get a loan from the insurance instead, and they will have it come off of your death benefit. So if you wanted to purchase something for $50,000, you take out a loan from your insurance for $50,000 and you don't have to worry about paying it back right away. They will have it come off of your benefit instead. So you could use the money while you're still living, as opposed to waiting till when you die and letting your family and everyone else use it. It's there for you to use. The reason for the universal life that a lot of people use for strategies is to help them if they've already maxed out their RRSPs, if they've maxed out their tax-free savings accounts, if they still have some money that they want to put in for growth. And you don't even need to do it if you've maxed out those other ones. You can use it just to help because you want to get more money. Because it's based on the market, you have a better chance of making more money on a regular basis, but it goes up and down just like the market does. So that's where the risk comes in. Now, I know for us, when we sell universal life, we stress it at 3% just to make sure that it covers, so that your monthly payments will cover if there is a drop in the market. We're there to support you. If you want to learn more, send me a comment, do a DM, reach out to me. I want to be able to support you to make sure that you have the right plan, that you have the right strategy in place, and you're using it the way you want to use it. I've got multiple policies doing different things, and you can set up the same thing. Next week, I'm going to talk about the difference between permanent insurance and term insurance. So that way you know which is better, and again, add more strategy to make sure you have your money working for you.